Hello, this is Kim Butler. Today's money myth is that you should pay attention to your effective tax rate. CPAs are part of this confusion. So when you have a discussion with a CPA, they will often talk to you about your effective tax rate, or they might say effective tax bracket. And this is statistically a mathematically correct number, but it has nothing to do with reality. Effective tax rates are not in existence. There's really no such thing because effective means they try to take all of the various tax brackets and add them together in some form of an averaging, if you will. And that's not how taxes work. The way that your income is taxed is based on brackets that are set by the IRS, and your income, as it grows, progresses through the various brackets. So your first amount of income that you earn every year is taxed at the lowest bracket. The second amount is taxed at the second bracket. The third amount is taxed at the third bracket, and on and on and on. And CPAs often want to take either, depending on how they do their math, your gross income and divide it by the taxes to come up with some type of effective tax rate, or they want to take your net income and divide it by the amount of taxes that you've paid to come up with some effective tax rate. Neither of these are accurate examples. What is much more appropriate for you to learn is about something called your marginal tax bracket. The highest income lies in the highest tax bracket, and it's called your marginal rate. So the term marginal is used to imply that the highest bracket that you're paying income taxes in. And it's that marginal bracket that you can have an impact on. So anything that you deduct, like a mortgage interest payment, or a contribution to a 401k or a 403b or some other type of qualified retirement plan, or a contribution to a charity, any of those deductions occur at your highest marginal bracket. So let's just say for discussion purposes that one tax bracket was at 35% and another tax bracket was at 40%. And you had $2,000 of income that went over the line from the 35 to the 40% bracket. So when you make a deduction, that is coming off your income. And if you make a $2,000 deduction, then that's going to be at the 40% bracket. But all it does is pull all of the other marginal income into the 35% bracket, because the 2,000 just is the amount of money that's at the 40% bracket. That's all you're able to impact. You don't get to impact anything else at any other bracket. Your highest marginal rate is the only place that you can have an impact. So I encourage you to Google the tax rates. You'll see the various tax brackets, like 0 to 10,000 of income might be at 10 or 15%, whatever the government has us listed at these days. $10,001 of income to the next amount of income will be the second bracket, and on and on and on up. You can look at those tax brackets, you can see where your own income falls, and if you are in a close place to a marginal bracket, like in my example, let's say you're just 2,000 over the 35 into the 40% bracket, then sure, you can have an impact on that 2,000 getting a deduction, and it will help you for that amount of money. But then that amount of money is gone. It's either in the mortgage or in the charity or inside your qualified plan. But it is important to be aware of marginal tax brackets, which you can look up online, and then you can see your total income and see where you fall and know the amount of impact that you can have, which is not going to be as much as what CPAs often make it sound like, because what they want to do is say, well, by taking this $2,000 and putting it in, say, this retirement plan, we've impacted all of your income. And that's not the case. You only impact what you can deduct. The money myth for today, again, is effective tax rates are something you should pay attention to. And the correlating statement is that marginal tax brackets are the only thing worth paying attention to, because they're the only thing you can impact. So if you would like some more information, go to partnersforprosperity.com.